Last but not least, Feroz Noorani, who has a long years also of very diverse and rich experience. He held several leadership positions at major banks. His experience covering all aspects of corporate investment and Islamic banks. In his current position as Chief Risk, he also oversees compliance, risk, and control and governance. He has a Master in Business and Finance degree in Law and Accounting, and also went through INSEAD, Oxford, lots of accomplishment, and we will benefit a lot from my colleagues' experience. You have a rich experience in more than one respect. You've done risk, compliance, governance, business, and you've done regional bank as well as international bank. So we'd like to benefit from your experience on the proper cooperation, the good governance, and how do we strike that relationship between the independent function. And if you could touch also on how to best continue managing correspondent banking relationship, because it's relevant to all of us in this part of the world.
Okay. Thank you, Shadan. As I see it, is basically the risk and compliance is two wings of the same bird, basically. We have to go together. A few decades back, the compliance did not exist and there was no independent risk function also. The risk evolved over a period of time. Where we worked in the international bank, even the business person used to wear the risk head, and he had a risk authority as well in Citi. But things have changed. From 9/11 to the financial crisis, more regulations have come. The Basel Committee have been issuing a lot of guidance, which has been adopted by several central banks, pursuing what they want to implement, what they don't want to implement. So what I would say is basically, when we talk about compliance, it's regulatory must-have. You have to do it. So, usually the CEO says, you always say, don't do this, don't do this. They always say to the compliance, why are you saying don't do this? Because it is a must-have, you have to have the regulation compliance. What we look at from the risk side, because I wear both the hats, is risk is going beyond just compliance. It's actually to have a best practice solution embedded into the organization so that you can balance the risk and reward for
So you mean this is the addition that forms your entity, is the level of compliance you want to reach in number of respects without being excessive, over and above strictly complying with the rule.
Yeah. So I've been always saying, and I think you have practiced that, is compliance is not a regulatory relationship manager, because that's in some banks, in some jurisdiction, it becomes like that. It's a checkbox thing that you want to be just a relationship manager to the central bank and make the central bank happy. The compliance officer should be actually an advisor, just like the risk manager, to the management to say how you can do business within the regulation and not being hurt. So you don't have penalties, you don't get repercussions against that. And this can come from what I'm saying is, what is the tone at the top of the board? The board has to have a compliance and risk view, and they have to say that this is what we want. So if I take an example of Wells Fargo, okay, in US, what happened with Wells Fargo some years back is because the tone at the top was, go ahead, do it, whatever you want, we are making money. And the same is what was happening in the UAE. Go ahead and do the transactions, AML, who cares about the AML, because the money that we are making from dealing with the neighboring countries and other money coming from East Europe and all that is fine because we are making money. So this has to be driven from the top, the board. And as you rightly mentioned, the compliance role is now also getting at the top with the risk management. With the issuance of the corporate governance guideline, which is just about 10 years old from the Basel Committee, not all the regional, even central banks have adopted it fully, but that gives the compliance, the risk seat at the board in terms of reporting directly to the board, having an access to the board. Like in my jurisdiction, the CRO does not report to the CEO, it reports to the board risk committee directly. and I have to meet the board twice a year without the presence of the executive management. So even the CEO cannot be present. So that's where the forum is given, that you can convey what is happening within the organization, whether the business is being conducted within the framework of what. And to have all that is basically, we need to set up what is our risk tolerance. Same with compliance tolerance. So you have to make a call whether we can do this particular transaction or the particular business within the framework, and what is the downside. Now, David made a comment about he has to do it in 20 days. In my jurisdiction, I have to do it in 3 working days. I have to file a SAR in 3 working days. And it has to be filed with the Ministry of Finance, where they have set up a financial intelligence unit, not with the central bank. So it becomes more, because central bank, you have a direct relationship. With the Ministry of Finance, it's an indirect relationship. So it becomes very difficult of how you manage your activities. So on the mitigation side, most important is basically we should have a very good and depth of the management. So the management should be aware of the regulations, even on compliance. For me, each and every employee of the bank is a risk officer per se, because if someone comes to a teller to withdraw the money, when we talk about money laundering, to withdraw the money, his role is to check the ID of the customer, whether he's the same customer or not. That's a risk function. He's making sure that he's giving the money to the right person. So if that is the role of a teller, at the CEO level, at the department head levels, or the heads of the business, they should also be aware of. So as risk and the compliance officers, I think it's also, what we are doing is also giving awareness to our business people, to the people who are doing the job, because ultimately they own the risk, not the compliance officer. If something goes wrong, it is the function which has actually destroyed the bank in terms of, because they've not implemented it right. And what we can do from our side on the risk basically is to have the right policies and procedures. So based on the regulation, compliance regulations and all that, like you mentioned about the electronic, electronic banking and the aggregators now, because you need to have all these apps which are collecting money. So that compliance framework has to be built in within the policies and procedures of the bank, so that undue risk is not something that is captured by the bank. You asked me to specifically talk about the correspondent banking, so where I would come to on the measurable.
Correspondent banking, because it's relevant to all of us, and it's about our customer risks and their rules.
Yes.
And the challenge of us meeting foreign rules, because a transaction is like a customer. When it crosses the border, it becomes subject to foreign law, plus the policy of those correspondent bank, who may have policy over and above the requirement of the law.
So what we do as risk is basically, we first have to know with whom you are going to have correspondent relationships, who should be your counterparties, and for which jurisdiction. So I, as the risk, will give them a counterparty limit and a country limit, so that the business people do not commit a mistake of sending a transaction of something which has got touched to Iran in US dollar, or something going from one bank in US which has got sanctions. So the setting up of the measurable limits is basically who should be your counterparty for what type of transactions, and which customers you are going to accept for the bank. So this is the framework that we do. And obviously, manual review of all these transactions is not possible, so you need to have an automated solution that triggers all this, the whole chain of trade, who is your customer, what is his jurisdiction, what is his business line, which shipping carrier he is using, because even the shipping carrier has to be also vetted. So all that vetting has to be done automated, because these are transactions that have to go through. And in terms of correspondent banking, is we need to have a open dialogue with our correspondent banks. Like we recently faced an issue with one of the international banks in New York. They said that you need to give us a response within X number of hours, otherwise we'll return the transaction. Now, they open at a time when we are sleeping here. So that means a compliance officer has to be there 24 hours to review the suspicious transaction, because the correspondent bank wants to be reviewed and have a reply, otherwise they will return back the money. So that also we have to do. This has been helped by the recent, the SWIFT doing the real-time clearing of the transaction, so we know where it is going. And if it is stopped, then our compliance officers can enter into the dialogue with the correspondent bank. So that's how, so the last thing, that's what I was telling, is basically models and tools that we need to have internally. And this is where it all comes about expense. So how much the bank is willing to expense in terms of investment in compliance and risk tools, people, and also infrastructure, basically. With the COVID, what we have seen is we were all reluctant as risk or compliance. In your roles also, you must have seen that we don't want to use cloud computing. We don't want to use remote working for people. We don't want to use onboarding, auto onboarding and all that. But the COVID changed all this. So we had to overnight accept that remote working is allowed for our employees, so that we have to give access to the bank. So cyber security, this became a most important issue for us during the COVID, because you want to make sure that he's working from home, but he's not misusing the system. So new risks are emerging all the time, and that's where basically what I say is, it's dynamic. The risk and compliance role is dynamic.
Absolutely.
And as regulation changes, we have to be having capacity to modify our internal systems.
Thank you. Just a quick final comment. Again, the compliance officer, as we said, has an important seat on the table, but he or she should be experienced enough in rules and business and has a lot of wisdom as well. Because there are two evils in compliance. One is making mistake, and two, being excessive in saying no. I think a true compliance officer should have that seniority experience. And in my view, of course, with the respect of all governance rules, the main partner of a compliance officer, without losing his or her independence, is the CEO. Because the frequency of contact with the CEO is almost daily. That's why, it's not a question of reporting. It's this healthy dialogue and getting the support of the CEO, of getting the rules, not just being written on policies and procedure, but to make sure that those policies and procedures are being enforced. And I don't know whether we have some time for question.